Let's talk about credit scores and credit scoring and where it comes from and why you have it. You know, when I was in the business in the year 2000 at National City, we didn't have credit scores that we used as the loan officer. So having a credit score model that is used to determine qualifying per se, or how you qualify for a home loan or how that plays into a home loan, it's pretty critical now. The higher the credit score, the better. And I'll tell you why. Because in lending, whether it's actually home lending or auto lending or any lending in general, using the credit score model, when we look at the credit score and we see a very high credit score, we realize you're not a credit risk. And if you have a lower score, we can tell that there's a little more risk there, because the lower the credit score is telling us that something has transpired during the process of the credit, meaning you have too much credit, you might have too many inquiries, you might have collections, late payments, judgments, bankruptcy, foreclosures. All of those items can be a deterrent and decrease your credit score. So you always want to make sure you make your payments on time. Don't have too much debt, meaning if you have a credit card, let's say the balance is, the high credit is about $1,000, you want to go ahead and keep your minimum outstanding amount to about 30% of that, or $300. And you always want to make your payments on time. That is really, really, really important. And so the credit score tells us kind of what direction to take in loan program for you. We have loan programs that will allow for a little bit lower credit score and a lower down payment. And then we have loan programs that allow for, the higher credit scores, the 700, the 800. And again, you're going to see a little difference in variance in interest rate because of the credit score, because it's a risk factor. And the lower the credit score, probably the higher the potential interest rate is for you, or the loan fee. So you want to really be mindful, if you're thinking about purchasing a home, of checking out your credit score. Let's see what's on that credit report that might be driving the credit score down a little bit more than you would like to see it. And we can give you some advice on the steps that you might want to take in order to get the credit score up a little bit. That will help you. So make sure you're really mindful of your credit score. That is really very, very important to the home loan process. It's one of the items we're definitely going to check into. One of the very first things that we do after we receive the application, or we do an application with you over the telephone, is we're going to run the credit. And a lot of times clients will say, well, I really don't want my credit run. I might get a ding on my credit. It doesn't really happen like that very much. In order to have a lot of dings on your credit, meaning inquiries and a reduction in credit score, you'd have to have a significant amount of inquiries. So just one is not going to definitely hurt you. But because it's what I tell my clients is, in order for me to make a qualified decision for you, in order for me to determine what program we're going to use, or for me to lend you hundreds of thousands of dollars, it's really important to check out the credit score. So follow your loan officer's advice, get your credit score checked out. You do have 3 credit scores from credit bureaus, and we will use the lowest of the mid score. If you only have 2 scores, that's okay too. If you only have 1 score, that's okay also. Just make sure you take care of your credit. As always, if you have questions about the credit score, the credit scoring model, I'm always here. Feel free to ask me any questions.